We're joined by Chris Weston from IG in Melbourne. Chris, great to see you there. Yeah, certainly a good day for US European equity markets, and also we saw a bit of buyer interest, it seems, in that US 10-year Treasury.
Yeah, I mean that was really the linchpin for me. Although I do think if we do go higher longer term in yields above that key 275 level, that will actually be a good thing for equities. I think the market will realise that's not just based on tapering expectations, but also genuine growth that we're going to see in the US, and that's obviously going to be a good place to be for a US equity investor rather than being cash. But ultimately, I mean, I think the thing I'm looking at is this consumer credit reading that we saw in the US as well. Very, very strong. Much higher than the market was looking for, the highest in about a year. That's obviously pretty good, but ultimately, you know, we saw the 10-year drop about 9 or so basis points. It got up to about 274 during our time frame yesterday after in early morning trade, and then reversed and then dropped throughout the trade last night. That 275 level, just above that, is really key. That's the downtrend that's been in place since from the 2007 high when we reached just above, well, the mid 5% levels. So we saw some technical buying. We also saw a number of fund managers coming out and actually saying that around that 274, 275 level was actually really good value longer term. That's where a lot of people have got their year-end targets, which include tapering. So we saw some value in investors, some technical buying coming through, and those lower yields generally saw some profit taking coming through in those long US dollar positions. So as a rule, what we're seeing at the moment is higher yields in the US. A steepening bond curve is good for the US dollar. It makes the dollar more compelling to hold. So that those falling yields of buying, rising prices really, quite negative for the US dollar last night. Some big moves in euro dollar, Aussie dollar, and obviously stocks had a big move up as well. So, you know, everyone's talking about the mortgage rate at the moment, which is obviously priced off longer-term borrowing costs and the bond market. So this is a good thing for investors. And this week, I think, and the next couple of weeks in the US, we're looking at the banks, see what they're having to say, and some of the home builders in terms of what it actually means for the backing up in yields and the impact that's having on the home price sales at the moment.
I wanted to ask you, we've seen Alcoa's results kicking off the second quarter earnings season there in the US. Seem to be a slight beat when you exclude the charges. What's your thinking then on the overall earnings season, what to expect? Are we going to get a sense that perhaps this better economic news is going to start being reflected in companies' outlooks?
Yeah, well, I'm looking at it from the way what I trade. I'm sort of a macro man, to be honest. I look at all multi-asset, really sort of don't look too much at the bottom up side of things these days. But what I'm looking at in terms of how companies are going to be talking to me is I'm going to be looking at things that have big exposure to China. Coach, for example, which I think comes out on the 24th, really has a lot of sales coming through emerging markets in China. I think that's going to be really interesting to see what they have to say about the Chinese economy and Chinese consumer. Of course, people will be talking about the banks. I think overall what people are looking for is about 3% earnings growth on the quarter for against the PCP. You extrapolate the banks and you probably have quite negative growth overall. But I'm not going to be looking so much at the investment banker side of things. Of course, their trading revenues will be very interesting to see. But I want to have a look at more Bank of America, Wells Fargo, those kind of names, JP Morgan to a degree, and see what they have to say on the backup that we've seen in yields and mortgage rates of recent times, because they have gone, pretty much parabolic, and that could have big implications on what they see with home sales going forward. So I want to have a look at Bank of America, Wells Fargo, the one with the big exposure to the housing market going forward there. From a stock specific, you've got to look at Baxter on the 19th. They have big implications on CSL, UPS from a sort of an economic standpoint. And then you can look at the home builders, Pulte and DR Horton, which come out on the 25th as well. Again, down to that sort of home price, home sale side of things as well. But I think if you're a BHP shareholder, Rio shareholder, what's interesting, if you get a chart of Freeport-McMoRan and overlap that with Caterpillar as well against BHP and Rio, they've pretty got a tick-for-tick correlation at the moment. So I think you've got to look at Caterpillar, you've got to look at Freeport-McMoRan, which come out on the 23rd, because, everyone's treating BHP, Rio and all these different mining stocks in the same basket at the moment. So I think we've got to look at their view on the outlook. And then, of course, you've got GE, which come out on the 19th, because they have big exposure to China as well. So I'm looking really at companies which have implications on the home, what's happening in the bond market in the US, but also, some of the conglomerates which have big exposure to Asia as well.
Overall, let's get a sense from you about your opening call for the ASX 200 this morning, given all the different moves we saw overnight.
Yeah, it's just going to be a good day. I mean, I think what's important is US futures were pretty flat, so we're going to incorporate all of the US move into our opening call. We've got the Open up 30 points today, about 0.6%, 48.39, so good days here. Japan, despite a dollar yen which is just pulled back below the 101 level, is looking like it's going to open up well over 1% at the moment, so that's going to be a good place to be. And I really like Japan at the moment. Some really improving fundamentals that are kicking on there. That and the US are probably my two favourite markets to be in at the moment. BHP going to open down about 7 cents based off its ADR. Although it did have a very good day in London, as did Rio, and iron ore's down a touch, I think down about 0.5% from yesterday. Copper's up about 1% or so from yesterday's close, so again that may have some positive ramifications. Gold, you know, it's crazy days to be a gold investor at the moment. Gold trade are very, very difficult. You know, it's up, some of these smaller caps up 5%, down 5% the next day. It looks like they're going to have good days today, although some of the gold miners did actually fall last night, so that's going to be interesting. Not really much to look out for today. Probably the Chinese CPI, the key economic metric to look at, and that's expected to see CPI at 2.5%. So I don't expect to see that being a key moving dial, to be honest. Inflation's not really the big issue in China at the moment. It's you know, the impact of lower credit and what that's having on the Chinese economy longer term.
All right, Chris, as always, thank you so much for that.
Thanks, Bridie.
Chris Weston there from IG in Melbourne.